do with business wins of the week. Does anybody have, if they're feeling bold, brave, proud of where the business is at currently? We celebrate wins, whether they are large or small. If anybody wants to unmute and share the good news here. Kevin, I saw you unmuted. Do you have a win for us?
I got my reviews like Brian had asked me to.
Hey, getting the reviews. We love hearing that. Those are powerful things.
Yeah, my phone has been blowing up, Kevin. You've gotten a ton of reviews this week. So good job, man.
Killing
okay,
it.
so you've been hearing it?
Oh yeah, I've seen it.
Good.
Well, he told me to get 15. I told myself I wanted to do 30.
Woo!
Come on.
We love that. We love that. Take
I'm trying to be average.
Well, awesome, Kevin. That's great. Keep it going. We're never going to stop bugging you all about reviews. I'm sure we have a few clients here that could testify to that they are sick of hearing it, but we're never going to stop. And so congratulations. Keep it going. Any other wins in the house today? Anybody else? All right, I see a hand going up. Just unmute. Tell us your name, what business you're with, and your win.
Hey, my name is Baba Rajo, Green Fitness Remodeling. We buy both houses now.
That is awesome.
Wait, can you say that again, Fabio? What happened?
We buy both house.
You're buying your first house. Come on, brother. That's awesome.
That is incredible. That's a huge win.
Fabio, come on. That's what I'm talking about.
I mean, that's the whole purpose, of owning a company is being able to, not just help people, but help you reach your own personal goals. And so congratulations. We expect to see pictures. We want to celebrate with you. And so thank you so much for sharing. Okay, any last minute wins here before we move on?
Yeah, I have a quick one. The picture here, Doyle Plumbing, as a client of mine, and I was on the phone with him in our meeting, I think it was yesterday, and on the call, and he never does this, so I know it's important. He's like, oh my, one of those applicants I was just talking to you about is calling me right now. I said, Josh, it's either me or him. No, I said, go ahead, take that call. And he took the call and called me right back and said, he just accepted the job offer and he's got a new plumber who's going to soon be in a new truck, in one of those beautiful trucks. So that's a huge win for him. He's been looking for a plumber for a little bit.
Nice.
Oh, yeah.
We love hearing that. We know that there's a lot of people out there trying to hire right now, and they are, far and few in between, but it is possible. So huge
I've also
win.
got one more. I know you asked for one more, Nicole, but I'm gonna give an extra. So I don't know if I shared this last week, but Clear Creek Plumbing and Gas are plumbers I work with here locally, and they just started doing financing. And last week, as plumbers, they're not remodelers, they're plumbers. They closed on an $18,000 job because they had financing available. So if you guys think it's not worth it, it absolutely is, to be able to have financing as an option for people that, may not be able to afford it outright, but they need the job done anyways. So huge win for them.
Wow.
That's what I'm
And these are
talking
real
about.
people because we see them in our office. They literally walk into our office. They're local clients. This is great.
Okay, well, we appreciate, sharing the wins here. And so today, what we are going to be talking about, how group coaching is going to work. So for those of you that have been coming to group coaching in the month of July, we've been doing it a little bit different. Jonathan Root is going to walk us through Profit First. Some of you might be familiar with it. It is a form of cash flow management that we teach. Every single one of the coaches here at Redmond Growth is a certified Profit First professional. And so we're going to kind of introduce you to that. And then we're going to go into breakout rooms. We're going to put everybody with an individual coach. There's going to be a handful of you with each of us. so that we can really tangibly go over profit first, answer questions, and really establish some good accounting habits for you all moving forward. So without further ado, I'm going to let Rudy take it over here and lead us through profit first.
Absolutely. Can you hear me all right? Can you hear me? Okay, cool. Just double checking. I have like 3 mute buttons I have to worry about, and you just never know. All right, so profit first. Let's just skip that slide. All right, so some of you have already been implementing profit first. Some of you have never even heard of it. Some of you are getting great results right now, and you've been implementing for a while. Let me just go through a brief introductory, a brief overview of this right now for those of you who've never heard of it, never heard of profit first. So profit first is a new approach toward accounting and cash management developed by Mike McCallowicks. That's how you pronounce that, in case you didn't know. And it's gaining huge popularity and with businesses across the world. So this method, in short, ensures profitability with every single sale. You never have to wonder, am I making profit right now? It's going to make sure, one thing for sure, you're going to make profit. So the best way to understand this method is really just to read the book. This is a book about the system, but it's going to be very important just to be able to, if you're an audiobook person, just to listen through it, or both. You can read it or simultaneously if you like that. But really, this method states that business owners should allocate a percentage of all revenue toward profit and any other expense. So everything is always accounted for. It brings the ultimate peace of mind and confidence when implementing the system. Here, let me tweak one quick thing here before into this. Here we go. I think I lost my slides. Give me 1 second. I want to make sure to create at least 2.5 awkward moments in each of these group calls. I think this counts as a half here.
Rudy is very gifted with those awkward moments. He's an expert in it.
She doesn't give me compliments very often, so I'm going to take that. All right. Are you seeing my slides here? Hold on.
No.
1 second.
Are you older than you look, Jonathan? You're making me worry here.
Why does it say, oh, it says pause. Why does it say my screen sharing is paused? Okay, 1 more second.
If you need, I can pull them up, Jonathan.
No, I got it.
Okay.
Can you see that?
Yep.
All right. So before we get into everything here, who's been implementing profit first for a while and can tell us a little bit about their experience with profit first to this point, or who's been having some real good success with it? Great. So that means a lot of you can either have just started implementing it or will begin to implement it. Let me tell you real quickly, here's a client we have. They're called Out Today. They're HVAC plumbing electric company over in Seattle. And they had their best month ever this last January with $0 spent on marketing and $36,000 in net profit with 2 trucks in the business. 2 trucks. And here's word for word what they said. I quote, "This profit first system is just crazy. I just bought a home, gave my friend $3,500, totally caught up with all my taxes last year, and I'm ready to pay quarterly taxes this year, and I still have money in my accounts."
He's ready to pay taxes. Nice.
I saw Bobby give a thumbs up. I know that a lot of us would love to be in that position where it's like, hey, I don't have any surprises anymore. Like, I'm prepared for my taxes. I'm prepared to buy that new truck. I'm prepared to take my family on vacation. You know, I'm trying to get a loan
Yep.
for a new house or whatever, and I'm not having any issues getting qualified for it. How many people have been in the position before where your accounting is the money goes into the account and the money goes out of the account? And that's what I know. Who has been there before? I'm seeing some hands. It's because nobody becomes a business owner because they're experts in accounting, unless you're becoming an accountant. You know, that's all we know is that money goes in the account. I got to pay bills. Money comes out. Whatever the leftover is left over. Profit First fixes that so that you can have stories like the one that Jonathan just told about out today.
Absolutely. Anybody else have anything, or one of you coaches can brag about one of your clients who've implemented Profit First?
Yeah, I can brag. I can brag. So Ryan Witten is a guy, a plumber I've been working with in Arkansas, and we've been doing Profit First maybe about a year or so. The thing that is important to me is that Profit First makes it creates strain on the finances in the business when there wasn't before, even when there isn't. So right now we're really looking at profitability and fine tuning a lot of the areas in his business where he might be overspending, things like that. But we're looking at the right areas all the while. So Ryan feels the tightness in his bank accounts because of how we're allocating money. But he was telling me too at the end of our call this last week that he has more money in his personal bank account than he's used to having. I don't know if it's more than he's ever had, but it's a lot of money in his bank account. I won't say the number for his sake, but because of implementing Profit First, he's got enough money there to make ends meet and more than that. And he just got back from a week vacation. He's going on another week vacation with his family this next month because he has finally enough money to pay for the vacation in advance. And so it works,
That's
guys.
huge.
It really does. Yeah.
Someone going on vacation in advance without having to worry about someone else who's begging to pay taxes because they have too much money in their accounts. So let's talk about the system here. So I want to go over, this is going to be a brief overview, so I'm not going to get too deep into some of the technical aspects, but I want you to know that these are important principles that really help just the overview, the principles of Profit First. First off, Profit First principles. So, you know, as a business owner, just know this: you've put tremendous risk into starting your own business. It's not a guarantee. That's why business is business. That's why it takes guts to start a business. You didn't start your business just to get by, you know, or own your own job, or probably you started it, you know, so you could gain true financial freedom and time freedom, you know. But the only way to do this is you need to start collecting a profit as a reward for being the business owner and taking that risk. Next thing is, you know, each business has a capacity to be profitable from day one. I'm not talking about this, you know, 10-year goal, you know, working with venture capitalists, raising $30 million and eventually pull a profit. And just, no, don't do that. Just stop it. We're talking about you guys. Okay, there's no reason you can't be profitable from day one. So profit is often misconstrued as something for the, you know, the bigger guys, or down the path when you're finally running a big operation, you know, you're ready to retire and finally I can pull some profit. This is great. No, that's all false. There's no reason why you can't start running a profitable business now. In fact, it should be profitable from day one. We're going to talk more about this, but essentially, it's time for your business to start rewarding you for being the business owner. So what Profit First is going to do here, it's going to provide you guidance, practical tools, and well-grounded confidence when making financial decisions. And it's very easy to use after everything's set up. Specifically, you know, I put this on here. Each business can benefit from this regardless of where you're currently at. I know we hear some people saying, well, I finally pulled a profit, or some That's not the only situation where you need profit first. The great thing is that you don't need to be in a desperate scramble for profit to benefit from the profit first system. Some clients we work with here, or I work with specifically, they're already meeting the profit first standards where they need to be at. But for these clients, even, it's a huge peace of mind. It provides guardrails so that as you grow, you shouldn't go above this many expenses, or you make sure your expenses don't get out of hand, and even give yourself profit as a reward, knowing full well you 100% can afford it, and there's no guilt attached to that. This money here is for me. It's my reward. So that's some of the important things I want you to know getting into this is profit is for everyone, and we have to start working towards that. Next thing is, I want to talk about something a little bit more specific in the profit first system. I'm going to talk about small plates for a little bit, and then it'll all make sense here. But who can attest to this? The bigger your plate, turns out the more food you can fit on your plate. Is that true? Okay. I'm scrolling through these yeah, we're getting some nods here. We're getting some high fives. Didn't even know that was possible. So the more you have on your plate, turns out, or the more you can fit on your plate, turns out you're actually going to clean out that plate and eat a lot more food than you may or may not want. So the size of your plate really matters as far as how much you eat. On the contrary, if you use a much smaller plate, turns out you eat a lot less. So the small plates principle here, how it's used in profit first, is that it uses this principle by giving profit, owner's compensation, these different areas of your business, tax, and all the other expenses, operating expenses. It gives them a designated. That's so important for the following reason. I'm going to talk more about this in this next slide. I have a beautiful visual I worked really hard on. This is profit first, or without profit first. This is how most of you are currently operating your business. And there's nothing wrong with this. This is not some guilt trip. If you do this, you're bad. No, you're not. That's everybody does this. Without profit first, you typically have one main checking account, maybe a savings somewhere, something that you put some money towards, but everyone's looking at their account. How much money do I have? $68,000. Great. For some of you, like, oh man, that'll last me 2 days. And some of you are like, man, that'll last me 3 years. We're all different. This is just for the sake of this example here. Well, if I'm looking at this, I'm like, all right, well, I know I can consume $68,000. It's all there. It's on the plate. It's great. Life is good. I'm gonna get close to about maybe 10 or 11. We'll kind of figure it out as we go. Well, with profit first, we are designating a plate for each of these core areas we already talked about, and it's accounted for. So with profit first, you have $14,000 in the profit account, $8,000 in your owner's comp account, $15,000 in your tax account, and the rest of that. Now you know what you're actually dealing with. You have a much smaller plate. You have $29,000, and you're not gonna. You shouldn't spend that money. So with profit first, it's pretty straightforward. A typical business owner will look at their checking account, determine how much they can spend just by glancing at their account. Profit first calls this, bank balance accounting. It's kind of it's not real accounting method. It's just kind of a joke. Everyone looks at it and determine how much they can spend. That's the normal thing. So with profit first, we use the small plate principle to benefit you. We separate your money, and you know exactly how much is designated for each area. Super important. Now, you don't have to ask yourself these questions that you normally would, which is, how much am I going to be able to pay myself this week? Will I pull a profit? Do I have enough money for taxes at the end of the quarter? Like we just talked about earlier, Out Today said, oh my, I'm ready. I just paid my taxes last year and I'm ready for the next quarterly taxes and I still have money left. That's exactly what we want here. So everything is accounted for. You have one small plate to operate the business out of, so you know exactly what you're dealing with every time you look at your accounts. Does it make sense so far? Oh man, thank you so much, you guys. All right. Now, when we're talking about plates, what Profit First is really saying is these are going to be separate bank accounts. So I want to give you a brief overview. I know some of this is like, oh my, how does this work? How does it get in there? We're not going to worry about all that right now. I'm going to give you a brief overview and you can flood us later with questions. The first account I want to go over is the income account. We're going to have 5 core accounts. This is where all the revenue goes into this account, all the revenue from the business, cash, checks, deposits, however you get paid. You just sold a $2,000 water heater job. Once it hits your account or it hits your bank, it goes into this account. All the money goes in there. The next account is the profit account. Profit gets transferred here. The end of each quarter, you actually get to keep half of the profits for yourself. It's your reward as the business owner. And the other half will be used as business savings. We're not going to get too deep into that, but and if you have debt, then 99% of that goes towards debt. And that's a great and very important debt strategy here. Next thing is the owner's comp account. This is the money you get paid, you know, as a salary, and just regular recurring distributions go here. What I mean by that is, however your accountant tells you to pay yourself, whatever that regular amount is, we want to make sure that money is included in here. So this account is designed to make sure you're paying yourself enough as an operator in your business. This is not the bonus. It's not the reward for being the business owner. This is just for working in your business because you work really hard. I like to think so. But the tax account here, this is used to pay owner's taxes, so your taxes and corporate income taxes. Profit First is set up to pay your personal taxes that you get. When you get paid from your business, you need those taxes to get paid. Profit First is like, well, we're not just going to give you a check and then say from the government, we're going to actually reimburse you for that. So when you get a check, you actually get that money. This account, it's meant to reimburse you for your taxes, and it's also to take care of business corporate income tax. Last thing is this is the operating expenses account. All the other expenses come out of here. That's a simplified version of it, but everything else that's not tax, profit, or owner's comp comes out of this account. All right. I want to go view a brief overview of real revenue. This is an important term in Profit First, and it'll make more sense as we go. But real revenue is the total revenue minus materials and subs cost. So the reason we use this figure is because this is a much better figure to really indicate the true size of a business. Here's an example. There's a $10 million year home building company. Turns out $7 million is actually spent on materials and subs. And then we would count that as $3 million of revenue. Why that's important, or real revenue, sorry. So according to Profit First, we want to make sure this business operates like a $3 million company and not a $10 million company, because that 3 million or the other 7 million is really just transactions with $7 million of transactions, because materials and subs, you're effectively just moving money from the customer directly to the purchase of materials and cost of subcontractors. So we really want to focus on the real revenue. So real revenue, once again, is total revenue minus subs and materials. And if you don't use any subs or materials, don't even worry about this. You can just skip this part if you're on YouTube right now. So the next thing, well, how's real revenue used in Profit First? You know, this is important. Real revenue will help you determine where you fall in this chart. Where should your business be? So here we have percentages based upon real revenue where your business needs to be in each of these areas. This is very important. So If you were a business that did 300 and let's say $1.5 million of total revenue, you have $100,000, $200,000 on materials and subs each year, then you'll still fall within that D column here, because that'll be about $1.2 million of real revenue. So we want to be at a spot where we're allocating 10% of real revenue into your profit account. You want to allocate 10% of real revenue into your owner's pay, 15% of real revenue into tax, and then 65 for everything else. We got Mr. Kevin Brown with a beautiful yellow hand here. Do you have a question for me? All right, if you do, just let me know.
And if you're curious about column F there for 10 to 50,
Hello,
it's
hello?
not as you, oh, there's Kevin.
Hey, how's
Yeah,
it going?
we can hear you.
So I had a quick question. Wanted to know, when you're talking about your revenue, are you using last year's income or this year's income?
Well, in this case, let's just take the most recent 12 months would be great. You know, unless your business has gone through dramatic changes and you've had a big change in the last 3 months, you could use that and extend it. If it was the last 3 months, just multiply that by 4. Just, make sure it represents a year. But yeah, typically the last 12 months. But whatever will be most accurate for you is most important. It's not a hard set rule. But yeah, this is definitely a 12-month range here of real revenue. That's an important detail here.
Yeah. And I'll also add, as a side thing, column F, the owner's pay, it is 3%, not 0%. So don't look at that and say, oh, I'm not paying myself anymore. But it's split between profit and owner's pay. We kind of use those interchangeably. And so it depends on the owner themselves if they want to allocate more revenue just to profit, take distributions, versus putting themselves in the regular payroll. So that's why that might look scary as that 0%, but it's not actually that you're not getting paid anymore. Once you reach a $10 million business, that'd be crazy.
We collect a lot of sales tax. How do you, that's in our area, that's 8% right there. Would you have a sales tax account?
Yeah, well, here's a rule with Profit First. We can go into more details about this as we go, but yeah, they talk about sales tax, and you should have your own account for sales tax. But Andy, I don't want to scare everyone off right now with too many accounts.
Yeah, but just one rule of thumb here is, Profit First is there's a principle, and the principle is that plate principle, where you have your different accounts that you're allocating a certain amount of money into. As you get comfortable with Profit First, depending on your business and your goals, you're going to start opening up different accounts. Like, I work with a boutique, so they do a lot of, they do have a lot of sales tax. So they have a sales tax account, that they're dedicating certain money into. And so that's one thing, is we're teaching you kind of the bare bones basics here. But as you're working with your coach, as you're getting more comfortable with Profit First, there's going to be nuances, and that's great. It's going to allow Profit First to work more for you. So love that question. Absolutely. Get with your coach and we'll walk you through what that would look like.
Yeah, very well said. And here's one thing I really need to highlight here is these are the numbers based upon research and lots of data. Profit First really went into this, but this is where you will ideally want to be for your business. This is where you want to end up. This is what we call the target allocation percentages. This is the target. Do not make the mistake and start with these percentages for your business unless unless you want a really bad day. So don't do that. So what we want to do, the main question from here is, well, where do I start? This is when I encourage you to go through this with your coach. We're going to help you and show you exactly which percentages you need to start, how to open these accounts, how to use each of these accounts very specifically. And a great thing to just stay ahead of it is you can bring a P&L for your next meeting, 12 months of the most accurate time range that you can get for a P&L, and just bring that up to your next meeting, and we could show you where you need to start and provide you a profit assessment. This is the core of what I wanted to make sure to cover here. Just an overview of some principles, how this really works. What I'd like to be able to do now is watch Bryce do his magic. And he's like, oh my, Jonathan, that was a really bad heads up. This is going to take me a few minutes here. Was that accurate?
That is not accurate. I gotcha.
All right. So we're going to hop in these breakout rooms, and we're going to go over a few specific questions about finances. And if you have some specific profit first questions, you can ask those. But yeah, Bryce, we're ready for it.